You know, I've always wanted to provide you with thought leadership, especially when it comes to financial topics, and that's why you should invite your friends. Share this channel with them, invite them to our community, because today's message is about this. Get ready your war chest. When the digital bank is here, move your war chest, move your emergency cash into the new digital bank. But firstly, you do know that there's a digital bank going to come right now. You do know about that, right? Actually, many countries have this digital bank concept already. Japan has it, South Korea has it, China has it, Hong Kong. Hong Kong recently had a new digital bank and they offered 6% in terms of interest. Look at this article over here. That was about 2 times more than what HSBC was offering. Of course, this was meant to be a sweetener to buy in customer base. But expect the same to be in Singapore. When this new digital bank comes along, they're going to give you something great, something you can't turn away. And what about for US? Do you know that mighty Goldman Sachs is actually doing a digital bank of themselves? They have this Marcus app, which finally got launched. And Marcus is actually offering slightly more interest back to the millennials back in USA. So everybody is on board on this digital bank concept. Whereby there need not be a physical bank, there need not be a lot of bank tellers to assist you. Very lean, very mobile friendly kind of a financial concept. That's why digital bank is going to be a big topic in Singapore for 2020. And that's why get ready your war chest, move it to there. Once you see it out, I'm sure they'll offer you something. There's no need to really keep your monies inside Singapore Savings bonds. There is so little interest. I put out for you to quickly see. This chart shows you how little Singapore Savings bond is giving to you. Not only that, when you do withdrawals from Singapore Savings bonds, it has to come out only on the next month. There's a time lag to it. I have a previous tutorial on Singapore Savings bond. The good part is Singapore Savings bond is guaranteed. But when it comes to flexibility, if you need not have fully guaranteed options only, the new digital bank is surely going to offer you something that really crushes the Singapore Savings bond. That's why I believe a lot of people start talking about the digital bank. A lot of people start forgetting the benefits of Singapore Savings bond, and that's why you should keep abreast to developments and what's going to happen. And just in case you think, a Singapore Savings bond has guarantee, why should you move to a digital bank? Why should you open an account and pump your monies there? Do you know that what is the qualifying criteria for the digital bank that's going to come in Singapore? The qualifying criteria is 1.5 billion in paid up capital. It's not any startup. It's not a flimsy, lousy starting amount that anyone can come into Singapore and do a digital bank. This is going to be two full license for digital banks that can reach to retail customers like you and I. And 1.5 billion paid up capital, that has really turned off away of a lot of unqualified corporates to come to it. The 3 that are in contention, I'll list it down for you over here. I'll give you my take on it so that you have some thinking to do about it. The first one is actually by SEA Group. This group owns Garena. This group owns Shopee. I'm sure you've shopped on Shopee before, right? They are so big. Their market valuation is right now $18 billion. The second group, Grab plus Singtel. Of course, Singtel you definitely know. Grab's market valuation is about 14 billion as of now. They are not listed, but with the partnership with Singtel, they have so much solidity now, and that allows them to have that paid up capital fully settled. The third person in contention is Razer plus a consortium of companies, which includes the friendly Sheng Siong. Razer is valued at 11 billion in its listing in Hong Kong. Of my pick, I think if I were to bet, I'll definitely bet on the first 2. First one being the SEA Group, the second one being Grab. Why? Because SEA already has Shopee. When you are doing so much e-commerce online, having a digital bank that integrates with your e-commerce is just going to be such an appealing concept. I don't know if regulators agree with that or not, or rather they should have their proposal to really highlight on that. What about Grab? Grab is controlling so much of our commute right now in Singapore, not only Singapore but really Southeast Asia, and that is really going to be an appealing message to the regulators. Not only that, Grab is also doing food delivery, so they track so much of your spending, your data already, and integrating a digital bank just makes the whole story so much more compelling. They are really truly a unicorn in Singapore, and they can really bring this thing regional much better than I guess many who are applying. So my bet is SEA Group and Grab, they'll take it down, and these 2 are really going to chase after your wallet. So get ready your funds. When they launch something, go with them. The Singapore Savings Bond may not be a necessary option for you anymore moving forward. So this message, if you like it, smash the like button so that more can hear about it. Again, share this with your friends. Let them know about what's developing in Singapore's financial markets. Again, if you haven't subscribed, smash on subscribe. Invite you to join our community. With that, I'll sign off. Take care and goodbye.